Trade Genius.
Hey guys, welcome to the Saturday edition of the Trade Genius podcast. I'm Philip and I'm here with Bob Kudla as always. And so Bob, today is Sector Saturday, I think we're calling it. And tell us what we're going to be looking at today.
Yeah, so there's a subset of the energy market that I think is really cool, and and I've been spending the year actually accumulating positions in the stocks that I'm going to share with you today. And they have two really cool attributes. Number one is bull on energy. We talked about that earlier in the week. The market is underinvested in energy. The economy is underinvested in energy, and we're getting a change in the politics of the country and around the world, shifting back towards energy supply, and all that equates to is higher prices for energy names. But within that, there are stocks that pay a very high dividend because they throw off a lot of cash and they got predictability in their market. And then within that, there are stocks that don't really depend on whether natural gas or coal or oil or ethanol are going up and down, because they're the pickaxe providers to the oil mines, if you will. So they're required in order for us to be in these industries, and they're companies that are growing, and they're growing their cash, and they pay high dividends. Everything I'm going to show you today pays a dividend greater than 8%, and some of them pay dividends in the 12 to 13% range, and they're sustainable because they're only coming out part of their cash flow. So they're not playing these games where they're adding debt to pay the dividends. This is all coming out of cash flow. And these companies are positioned very well for the next 12 months. So with that, Phil, why don't we go ahead and throw the first one up there?
All right, awesome. Okay, so our first chart here is Green Plains Partners.
Yeah, so GPP, Green Plains Partner, they are in the storage and transportation of ethanol. Okay, and ethanol is a protected species, subset of the corn market, have very powerful senators and congressional support, and it's also a way in which they can dilute the amount of fuel oil that we need to run the transportation in this country. And so they pay off quite a bit out of their cash flow, and they pay quarterly dividend. This one's north of 10%. I own this one. Don't worry so much about the wiggles in the price. It's just that you just buy this, and if you don't need the money, you reinvest the dividends. If you want the cash flow, you take it. If you're storing for the long term, you throw it in your IRA or your 401k, and this thing will just trade within this range, and it's a great company to own. So, and I personally own this one.
Okay, cool. So right now it's trading roughly around $12.75, and you see it going where?
Anywhere within $1 to either direction here, Phil. And but their dividends paying north of 10%. Okay. And the dividend cycle is coming up here in the fourth quarter.
Gotcha. Okay, perfect. All right, next one up is going to be USA Compression Partners. And what do they do?
Yeah, so they provide infrastructure to provide the pressure, as their name implies, in the natural gas wells and in the natural gas pipelines. So they're an equipment provider for natural gas. And so these parts wear out. They're considered like a consumable, if you will. And so as long as we're pumping natural gas, we're going to need USAC. They also pay a dividend. If you notice the stock chart here, it's painting right now an inverted head and shoulders pattern. So this thing can blow up another $2 or $3 from here. And their dividend yield is north of 10% as well. I also own this personally.
Okay, awesome. Yeah, that chart's setting up. Looks like it's setting up for a move. Nice little pullback here to buy the dip on for sure. The next one up is Viper Energy. Tell us about Viper Energy here, Bob.
Yeah, so Viper Energy is VNOM. It's in the oil space, and what they do is they own the mineral rights in Texas for oil. They don't necessarily drill themselves, so they don't have any drilling risks. They just lease out the land underneath it for other drillers to try to extract oil and gas out of those properties. And they cut whatever deal they cut, either it's a shared deal or you're paying a lease or whatever. But again, those leases are becoming more and more valuable. They pay out a high percentage of their cash flow into dividends. And and again, this one is north of 10%. I don't own this one yet. I'm waiting for more of my cash flow in this account to increase so I can go ahead and buy this. but I'll be buying this thing within the next 3 to 4 months, but okay to buy now. Again, it's another stable company that provides high dividends in the energy space, which is absolutely going to have a good year next year, on top of a good year this year.
All right, and that looks like a monster head and shoulders forming on the 4 hour. It looks like it wants to bust out at $33 soon.
Yeah, this thing's ready to go.
All right.
So another one, it's just another hidden gem.
Yeah, cool. Okay. So that's Viper. Next one up is Enterprise Products Partners.
Yeah, so Enterprise Product Partners is that they're basically pipeline. So they move liquid distillates, liquid petroleum, and so on and so forth throughout the central and southeast United States. They pay an 8% dividend, and they're owned by 40% owned by one family, extremely stable. And these are the kind of stocks you want to own when the market starts going wonky. And again, we have to increase supply, we have to increase transportation, we have to increase infrastructure, and these people are well positioned to do so. Again, it's a nice company to own, and you can, again, once again, stick it in your IRA. You can generate for cash flow. I don't own this one yet, not because I don't like it. It's just, once again, I've been buying these all year long, and I like to buy enough of them to make a difference, in terms of my cash flow moving forward. So they're in my gun sights for 2024 as well.
Okay, and the symbol on that one is?
That's EPP or EPD.
All right. And I think that does it for the charts you had queued up for today. So
yeah, and one more I want to talk about, though. You may not have a chart, but also take a look at KMF. They're in the infrastructure play for energy, okay? And they're across the board, renewables or fossil fuels. Biden administration is shoving a lot of money into the infrastructure for that. The world is telling us to get into more in fossil fuels. And so KMF's one. I've owned this one for quite a bit of time. I'm actually reinvesting the dividend in it. It's a great company. It's a drill baby drill company, because it doesn't matter if you're talking about air compression for batteries, or you're talking about renewables, or you're talking about oil and gas. They're engaged. They're involved in it. And so that's another one if you want to look at. Again, I already own that one, and I own that one in my IRA. And again, I'm just letting it accumulate and also provide me with reinvested dividends to grow the value of that company over time.
okay.
So that's what I want to talk to you guys about. It's a great space to be in. You always want to be in something that people need in order for it to extract value down the line. And I like the fact that I don't have to worry about his oil at $80 or $130 a barrel. It doesn't matter. You still need the equipment to drill it, and vice versa. You need the equipment to move it or to store it. And I'll be showing you guys more of these over time. And every Saturday, what I'm going to try to do is focus on a different sector that I think over the next 30, 60, 90 days is going to pay us. And they're really lining up right now. I think the Fed blinked a little bit on Friday, and they've been sending out tidbits to everybody. So I think we're going to get a short-term, at least through the year end, kind of a relief rally. And then 2024 is going to be a really interesting year, because I think we're shifting from what I call the financialized assets into commodities. So we'll be talking about a lot of these commodities going forward. So stay tuned. These guys are free money for you guys, and I hope you take advantage of it. And then if I can, hit like, hit subscribe. Check out our service, tradelikeagenius.com. We provide these trades all the time. We're doing extremely well in stocks and in crypto. And if you like the day trade, we have a room called the VIP room, where we absolutely on Friday slaughtered it. People made a year or 2 years worth of their cost of the service just by being in the room and just picking up the information that we help provide in order for you to make really good decisions. So tradelikeagenius.com, check us out, hit the promo code and talk to Matt in sales and get in here and make some money. And with that, Phil, I think it's all I have for today.
Yeah, awesome. Yeah, I was going to say too, to that point. I mean, if you were in the service or got the newsletter, I mean, you knew on last Friday it was risk on, even though a lot of people thought that yields were going up and this and that. But like we tell you guys all the time, it's really about how much liquidity they're letting into the system. That's really what drives it. Everything else is really noise, and including rising yields, because they can override that. So once you know where that stuff's at, you have the upper hand on this market, and some of these moves then start to make sense versus being head scratchers for a lot of people. So anyway, like Bob said, check us out at tradegenius.co. And with that, guys, we will catch you back on Monday. We hope you have a great weekend. Bob, thank you for your time and those great dividend plays. That's going to generate some nice cash flow for the folks. And we'll see you on the next one. All right, take care, and thanks for watching. Bye-bye.
Bye-bye.
Trade Genius.